Welcome back. Let's check crypto this morning, and we see Bitcoin at 74,630. We want to talk about policy. The Clarity Act facing a critical deadline. Just weeks left to advance the Clarity Act before the legislative calendar tightens. The crypto bill, which passed the House last year, has remained stalled in the Senate over stablecoin rewards. The White House signaling progress as negotiators work to clear those remaining hurdles. Top crypto advisor Patrick Witt says a compromise on stablecoin yields is holding, a key step toward moving this bill forward, though it still needs a Senate committee hearing before it can advance to a full vote. White House economists say allowing stablecoin rewards would have only a minimal impact on bank lending, and we won't see a huge move out of deposit accounts, pushing back industry concerns. Joining me now is the Chief Policy Officer of Coinbase, Faryar Shirzad, with me once again. Faryar, great to have you.
Good to be here.
Thank you so much for being here. What's your expectation on the markup of this bill?
I think we feel great about it. You know, there's been a lot of really good work that's taken place since the Banking Committee initially tried to do the markup a couple of months ago. We've been working on an issue regarding stablecoin rewards, which we think is really critical. All of those are, I think, resolving themselves. So we're hopeful that Chairman Scott will be able to schedule a markup as early as this month. We'll be able to get to the floor in May and get the President and Congress another big bipartisan win.
So explain once again, remind our audience what the main issue is. I mean, the crypto platforms want to be able to pay a reward for those people who have crypto money or stablecoin in their accounts.
That's right.
The banks are saying, look, if you offer, like, pay people, it's like, you know, the banks used to give us toasters, right? If you're going to pay people money to put their money in the crypto platform, well, then they're going to take their money out of traditional bank accounts.
That's right. That's what the allegation is. Really interestingly, the Council of Economic Advisors at the White House put out a very academic study. They did essentially a research review of all the analysis that's been done on this issue. There's no evidence that there's going to be deposit flight as a result of stablecoins. So I think that issue substantively has been put to bed, but it's still a political problem because the bank lobby groups are trying to fight stablecoins. But basically the issue was when Congress passed the stablecoin bill, the Genius Act, last year, one of the big things they were trying to do is to bring stablecoins from an offshore market onto the U.S. There's about $300 billion of stablecoins in circulation, $220 billion of which are issued outside the United States, subject to rules other than the U.S. And so the goal of Genius was to bring that market in. Rewards are a critical part of that. So we've been defending the president's initiative, defending the policy underlying the bill, trying to make sure that stablecoins take root in the United States. The banks have been fighting back on that. I think we'll get to a good place on that. The White House, Treasury, the Senator Alsabrook, Senator Tillis, the Banking Committee, Senator Lummis, all of them have been working on it. I think everyone understands we can't get this wrong because we're at a critical moment.
Absolutely. And you're in touch with all of them. I mean, you're trying to shape policy at a time that you've got this growing business. 12 different businesses at Coinbase?
Yeah.
Where do you look for the actual big growth story at Coinbase? Is it the everything exchange? Is it the rewards? Tell us where the growth story is.
Well, Coinbase is built on a conviction that the global economy is going to move on chain. So payments, financial activity, all of which are going to be done on chain. The activity that we've seen even over the last year in the U.S. for sure, but even overseas, is sort of proof point of that. And so what Coinbase has done is positioned itself to be a significant player in every bit of that, as an exchange, as a custodian, as an infrastructure provider, providing the premium wallet for self-custody. We have 12 different business lines that each earn over $100 million annually. So we feel really good about having a strong, diversified business, but also being well positioned for what we think is the future of commerce.
And the future of commerce is going to include what we call tokenization.
That's right.
And I want to get your take on this because the IMF is warning that tokenization could bring new risks to the global financial market, saying that automated trading and the so-called smart contracts could amplify volatility, make market shocks harder to contain. The IMF says that they want stronger regulation on tokenization and coordination globally for tokenized assets across borders. How do you do that? And do you think every market will ultimately become tokenized?
We think every market will become tokenized. Think about it. In capital market activity, almost every capital market trade occurs either in what they call T+1, T+2, T+3 settlements, sometimes longer. That means there's a lag between when the deal is struck and when it actually closes out. That intervening period is a period of enormous amounts of risk. Token-based capital market activity compresses the settlement period, allows for instantaneous settlement, public incorruptible recordation of ownership. All of this is better for a healthier, more resilient capital market. The SEC chairman, Paul Atkins, the CFTC chairman, Mike Selig, both understand this. The president has their back, and they're moving to tokenize the markets. And that's really exciting. It's exciting for us as a crypto company, but it's really, more importantly, good for the American people, because we'll have a better, more resilient financial system, and it'll help with the growth of commerce in the United States.
And we've had Paul Atkins on and Michael Selig on, and they've said just that they want clear rules of the road so that people understand where this is going. But this is a new world. I mean, digital assets is a new world, and that's really where financial services are going. I can understand the banks being upset with Coinbase and other companies, because they were forced to accept this, I think. I mean, initially, many of the banks were saying, well, no, we're going to get there, but we're not there yet.
Yeah, look, I mean, really interestingly, we have actually partnership with some of the biggest banks around the world, including the biggest U.S. banks, because they understand the future is tokenization and stablecoins. They're looking for a partner to build with. We're excited to be the partner of the biggest banks, but the Beltway is a funny place, Maria, as you know. There's a kind of an ecosystem of people who spend all their time fighting over things in Congress.
Yeah.
There's a bit of a disconnect with what we see in D.C. and what we see with their business folks.
Yeah.
I think we'll be able to resolve that. The banks are critical as a part of this future, on-chain future. I think there's a lot of opportunities for them.
Right.
We want to help them get there, and I think we're excited about that.
So right now, you can pay, the legislation as you know it will be that, yeah, you can pay rewards if you're part of a membership program. Real quick, explain where you're expecting clarity to land.
So the law of the land is, if a customer has a balance on our account, we can pay them a reward. The banks have got really concerned about this. They said, no, there has to be some activity before you qualify for the reward. We've conceded that point. It's just a matter of how what the fine print looks like, and I think we'll get there.
Faryar, great to have you. Thank you so much.
All right,
Good to see you, Faryar Shirzad from Coinbase. We'll be right back. Stay with us.